Good morning, guys. We're going to be doing classwork 4, which is the 2018 IEB paper, November IEB paper. It says here Veritas Limited has authorized share capital of 300,000. Extracts from the statement of financial position for the year ended 30 September 2018. They gave us our share capital, which is 456,000, and the number of shares will be 120. I will firstly start with that information. Authorized will simply be number of shares will be 300,000, and then we have issued. Under issued, I'll have that 120,000 shares that were issued on the first, were in issue on the 1st of October 2018, which is the beginning of our financial year, and the amount was 456,000, which is the share capital amount, is the value we received. We have this money, so basically in exchange for that 456,000, we issued 120,000 shares. So we have 456,000 in our bank. Basically, it's in our hands, and the shareholders have 120,000 shares in their hands as share certificates. We issued more shares on the 1st of December 2018. We issued 10% of the authorized shares and received 170. So basically, they gave us our share capital amount. We don't need to. All I had to calculate was the shares that we have issued, which is 3,000 shares. That you will get taking 300,000, multiplying it by 10%. 10% of 300,000 will be 30,000. They were issued at 580 cents. And how did I get that? I took 174 and I divided that by 30,000. That's how I got that 580 cents per share. We bought back shares on the 20th of July 2019. That's when we realized that our profits before tax had doubled due to drought in the Western Cape. With this in mind, we repurchased 20,000 shares at R3.30 above the average share price. Guys, I need you to listen attentively to what I say in the videos that I have uploaded, because I emphasize these things and some of you end up making the mistake. You need to understand here we repurchase shares at R3.30 above. This is not the repurchase price. It says we repurchase shares at R3.30 above the average price. So if the average price was R5, it means I was going to take that R5 and add it with R3.30, and whatever I get, that is the value that we repurchased each share for. Okay. Now I don't have the average price. I'll have to calculate it, which is my APPS, which is the share capital before the buyback divided by the number of shares before the buyback, and that will give you 4.42 cents. All right, 4.42 cents multiplied by 20,000, it'll simply give you 84,000. 120 shares plus 30,000 shares minus 20,000 shares, you will have 130,000 shares remaining at the end of the financial year, but our share capital will be 456,000 plus 174,000 minus 84,000, and that will give us 546,000, and we realize that our price is the same at the end of the year. I'm gonna come back to that R3.30 above the average share price. I know my share capital will be valued at R4.20 per share. Take that multiplied by 20,000, it will give you 84,000. Our share capital will decrease by that 84,000. Bank, how much did we really pay for these shares? We paid 750. What is that 750? 750, it's simply R4.20 plus R3.30, because we purchased at R3.30 above the average price. Our average price in this scenario is R4.20. You just have to add that R3.30, and then you will get the price we paid per share to buy back those shares. Now, in total, because we bought back 20,000 shares, we actually paid 150,000. Basically, we made a loss. Our bank will decrease by that 150,000 rand. Our loss will be recorded in retained income. Please remember the loss from the buyback doesn't go to the income statement. I hate saying such mistakes because every time I say it doesn't, you guys take it there. I said it doesn't. It doesn't go to the income statement. I know some of you will take it to the income statement after I've said it doesn't go to the income statement. Any transactions between the business and the owner do not go to the income statement because that is not a trade transaction. It is not a transaction that resulted in us earning income. All right, it is simply us either taking from the owners or giving back from the owners. It has nothing to do with the operations of the business. Now, in this case, you will simply 20,000 multiplied by 330. It means we made a loss because we bought back shares at 330 above the average price. The fact that we bought it above the average price, it means we made a loss and the shareholders made a profit, and they made a gain of around 66,000 and we incurred a loss of 66,000. I repeat, this loss doesn't go to income statement. It goes straight to retained income, of which we will start with shortly. It will reduce your retained